All right, Umang Nahata joins us now, CEO with Mastech, and let's connect with him to understand that how things are moving and what are the factors which are really at play. First, let's understand the big picture. We're getting divided indicators from the IT numbers which have come out so far. What is the big picture according to you? How are things looking in terms of the client spending and the AI impact?
Yeah, I think it's a thank you. First of all, thanks for having me on the call. Uh, from a broad IT spend point of view, it's a space where there's a degree of uncertainty yet right now in terms of President Trump is to start soon, and then while there is a lot of positive feeling or sentiment about the economy, but there's also a degree or sense of unpredictability that prevails. And as I was listening to your previous call, especially around what will happen to the economy, what will happen to relationships with India on visa and immigration front, as well as on the dollar aspect. So those are important aspects for our industry. So a degree of uncertainty and I would say wait and watch there. As far as AI is concerned, I think it's a wave which will really, overthrow everything that we are doing today. It's really building up well. The technology is really coming out phenomenally. The only barrier to the execution of technology is getting the right policies and getting the right security in place. Most of the governments and larger organizations are looking at putting together their AI policies. I believe as soon as the AI policies are put in place, it will drive a significant wave of adoption. I mean, the benefits are phenomenal. Why would anyone not pick up the phenomenal benefits that are available?
Put this into numbers because your EBITDA margins for the quarter gone by have dropped about 32 basis points, profits fell 26%. What's the visibility going forward, and what are the levels that you're, calling out for the quarter and the fiscal end?
Yeah, I mean, this quarter Q3 is generally a weak quarter for us. It's a quarter where we have furlough in our UK business, a large portion, and we had a more than expected furlough this quarter, which I mean, despite which we were able to still sustain our revenue levels to flattish, but it did impact some of our growth possibilities that we had. As far as the bottom line is concerned, we had 160 basis points of impact because of salary hike that we have delivered in this quarter, which was for the full organization now. So, but going forward, I think we are looking at turning around our bottom line scenario. That's one of our top priorities going forward. But it will take us at least a couple of quarters as we really go forward to cross the 17.5 barrier. We are looking at holding it closer to 16.5 or a little beyond that in the next quarter. But going forward is where we are really seeing positive impact or taking it back to over the midterm. I would say in the next 2 years we are really looking at going back to the 19% levels. But right now it will take us some time to put it together.
The other thing I also want to talk about is also, you've got equivalents of nearly 500 crore rupees on your books right now in terms of cash. How is it that you're planning to utilize it?
Yeah, I mean, it's a healthy cash position to be in. We're currently looking at, I don't think there's any inorganic or large inorganic in play right now. We are, while on the, we're looking at currently stabilizing the assets that we acquired over the last few quarters. We're really going to integrate our Salesforce data business into our ecosystem and put that together and make sure that our North America business starts firing. But as we go forward in the midterm, which is 6 quarters down the line, is where we would really start looking at aggressive inorganics again. Having said that, we would and we are actively looking at tuck-in acquisitions and investing more in our UK Europe market. That I think it's a market which is really doing well. Our chances of winning and growth in that market is much higher, and we would look at investing in that region.
I want to talk about your total client count as well, because that's also decreased from the earlier 380, right?
Yeah.
Provide more insight into what were the reasons behind it scaling down to 351, and is this a one-off situation, or do you see, further rationalization in your client base?
Yeah, I think it's a very thoughtful and planned execution of client or tail account reductions. We looked at our revenue per resource and the clients which are generating higher revenue versus the clients where we are generating low margin revenues or smaller amount of business. And we took a systematic approach to reducing our tail accounts. Our vision is to do far more with lesser accounts. And with that particular view in mind, we've systematically look at reducing the number of tail accounts that we deal with. If you look at historically, our business would generate a lot of tail accounts, 30, 40 customers a quarter. So we've, very systematically brought it down to 10 to 15, but marquee customers every quarter. And we're also reducing the number of tail accounts that we had. It is also an impact of reducing customers which were driving low revenue per resource. And therefore, it's not just customers, it's also an employee headcount reduction that we're looking at. So like I said, our intention is to really drive operational efficiency and drive profitability up in the short term, and then go back to growth discussions, significant growth discussions in the H1 and forward.
Right. So you've added about 10 new clients then in the third quarter. Tell me what's the nature of these clients, the specific industries or geographies, and the potential contribution to your future growth?
Yeah, sure. So I think these are really good customers that we are getting in. So these are across all the key sectors that we look at. So starting from, we've added a new department in our UK SGS business. It's something that we're really looking forward to. We've also largely secured the book and ship or the book of business that we have. And our intention is to go after and secure more and more newer programs and newer departments in the SGS space. So as to drive growth there. We've also seen good customer acquisitions in the healthcare space. So we continue to see healthcare provider customers, getting added to our portfolio, which is another really good sign. That's a space that we continue to look forward to. And then there is a third segment that is developing, which is around ports and utilities. So we've got this customers around ports and utilities, both out of UK as well as out of our Australia business. So that's another segment that is developing well. Manufacturing and retail continue to be a good segment, but the first three are the ones that had the newer client additions in this quarter.
Umang, I also wanted to talk about how the segmental performance has been for you. Tell me what digital and application engineering has contributed towards, and what segment of your business do you see actually performing in the future quarters to come more than the others?
Yeah, digital continues to be a key segment for us. Our digital business currently is still largely a UK Europe centric business, and as I said, our UK Europe business is really strong and continues to show strong signs of growth. So big portion of our growth this time has been from the UK Europe business, especially around healthcare in the UK geography. Having said that, I think our other service lines, which is around Oracle, Salesforce, and data, also continue to do well. We really see data as the segment that will outperform all the others in terms of growth percentages. We're seeing good demand globally, not only in North America, but also really good demand in UK, good demand in APAC and Middle East for data. We are also making some significant changes in the way we've used to deliver our Oracle and Salesforce capabilities. Our intention is to become the first and the most advanced adoption of AI in deploying Oracle and Salesforce solutions. We've recently launched our first AI platform for deployment of Oracle applications. And we will be making significant strides in terms of trying to become the leading provider of AI-led packaged application deployments.
And thank you for joining us. That's Mastech Management for you.
Thank you.
Stock 2660, but today the entire IT space is in some kind of a disarray. So you really cannot take that. You cannot take that in isolation.